Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for November 19th through the 23rd, 2018. So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing, and let's go ahead and get into it. So this week was really rough. Monday, Tuesday, we're in the negative. Wednesday, we made a video going over it on Tuesday night, how futures were looking pretty positive. Actually turned out either a little bit flat or actually up in the NASDAQ. So we'll go over everything that was shared and then go over some of the FANG stocks for this week. So Monday, everything was down basically over a 3% there as far as the FANG stocks. Verizon, Realty Income were a couple I was watching that are hitting their 52-week highs. Monday, released a video going out and how I started up my 2.15% no penalty CED over at Marcus. I think it's a good platform. I've had a lot of good feedback as far as what others have been using it for. Ali over Ali Invest, I believe it is, they do offer a 2.25% annual percentage yield, but you do have to have $25,000 of cash sitting in that account, and I just don't like having that much. I have some in there, and that's making me 2.15%, so I'm completely happy with what Marcus offers for what I am trying to get out of it. So Monday ended up negative. All the indexes down 1.5% there. Ones that were kind of holding it up: consumer, utilities, healthcare, and communications. So keep track of that. Now I posted 3 articles going over why Facebook, why Nvidia, Apple are crashing out here, and how far they've actually fallen here from their 52-week highs. Now, stack this week's losses on top of them. We're going to go over that. So everything's already down 20%. Now we're going to be stacking up this week's changes on top. Goldman Sachs believes the U.S. economy is going to be kind of flat going to 2019 and beyond. And that, with rising rates, it's not hard not imagine. And that's why we've all been kind of transitioning our portfolios for more of a growth, because we know growth, that's going to get stalled out there with these rising rates environment, the dollar getting stronger. Growth isn't going to be really a factor. We're going to trend sideways, and I'd rather get paid out dividends while we're trending sideways and kind of catching our feet than losing. So 5 stocks going activity next week. The winners were Johnson & Johnson, Stanley Black & Decker, Cole & Frost Bankers, Realty Income, and Maximum Integrated Products. So we made an article there, have it on my website, but I will also have it in the description below. If you guys would like, check out my website, have that article up in there. Buying the dip is sort of a dead topic. If you're buying the S&P 500, that probably worked out for you, depending on where you bought it at. And if you're just investing for the long term, that's great. But if we take a look at just the FANG stocks, if you took a look at some of these stocks back in the 2000 crash, if you're buying individual stocks, buying that dip could be putting you into the negative right now. If you bought Cisco back prior to 2000, before that crash, you've never recovered that $80 price point. But, will Apple, Netflix, Google, Square, will these recover back up to their highs, or will they kind of trend sideways for a while? And it'll take them years to even hit those 52-week highs. So Amazon, for example, they're at $1,500 right now. Their highs were at $2,100, I believe, somewhere up there, $2,050, somewhere along those lines. We'll go over it here in just a minute. I'm updating my website at financial-investor.com. I'm working to create a few different pages going over personal finance, investment vehicles. My main 2 investment vehicles are stock market information and real estate information. So I'm going to be posting up some information over my website, kind of bringing, I'm working on those websites, so they're not live. So that's just information I'm trying to get out there. I'm trying to prop up my website, make it more resourceful. Tuesday, another bloody day out there. Apple did break below 5%. It broke into the $174 range, so 174, 175 in that area. So we did make another video going over why everything kind of fell that day. We saw stock futures going positive, so we did see Wednesday was expected to be positive there, so we kind of talked about that. And then here on Wednesday, we did see, again, consumers, utilities, healthcare, communications being positive. So if we looked at Monday, we looked at Tuesday, we looked at Wednesday, it was these consumers, utilities, and healthcare sectors that did really well. S&P moving up 0.3, NASDAQ moving up 0.92, Dow Jones staying basically flat. So got to watch those sectors as they move. I got sent some swag from M1 Finance, so I did a video of an unboxing event. Check that out if you haven't checked it out, if you're interested in that. go ahead. And then I posted this week's changes. The main one here that we're not going to be discussing in the following index is just my portfolio. I lost 5.12% this week, and this was due to Apple. Apple has been wrecking me week after week after week. This week, Apple fell down an additional 10%. And Apple makes up a good portion of my individual stocks. So it makes up basically half of my individual stocks. My wife's Roth IRA is sitting at about $9,000 in equity. My IRA over on Merrill Edge sits around $8,000 to $10,000 of equity. I've actually lost quite a bit there over just the last month and a half, and it's just equity. I'm still up, I believe, in my position. I bought Apple at 162, so I'm not too worried. And it's just, this time in the market right now, it's going to get volatile. But I believe kind of going into the future, Apple, as they're transitioning from a hardware in their iPhone sales aren't their main focus. It's all service driven. Where they're able to make their money without having to put out a new product every single year. Not everybody's going to be upgrading their phones every year. I still have an iPhone 6. I don't plan on upgrading my iPhone 6. The only reason I upgraded my past iPhone is because the microphone broke. I could no longer talk into it. I had to have it on speaker in order to actually talk and listen to other people. So, I think as they're transitioning from hardware to services base, I think that's much better for them. So let's go ahead and take a look here at the S&P 500. So 5-day change, down 3.79%. Year to date, down in the negative 1.54%. Dow Jones also down 4.44% this week, down into the negative 1.75%. The NASDAQ here still hanging on there by a thread. 5-day change down 4.26%. Year to date, still positive, just slightly, 0.52%. The Russell 2000 down 2.54% this week. Year to date puts them into the negative even more, down 3.05%. The emerging markets also selling off this week, down 2.84%. Year to date, down 15.66%. So they're kind of trending here. We'll see how they kind of go. Stock futures right now are looking basically either flat or a bit negative here. You can see if I refresh the page here. Okay, so S&P 500 down 0.04, NASDAQ down 0.01, Dow Jones basically flat. So Cyber Monday, you're going to see some sales on the stock market. So I know I'm getting investments, getting deposits going in. I'm going to be looking at what stocks are going ex-dividend in my portfolio going into the next week and beyond. That way I can see if I can average into those stocks and pick up some more dividends from their upcoming dividend payout. So we have our after-hours screeners. We saw EA Sports kind of making a bounce off their lows. They were slammed just within the last few weeks, after their earnings as they're coming out. And I think it's I don't like EA myself. They're moving from just putting out content to locking content behind a charge. When they came out with their Star Wars, I forgot what the Star Wars game was, but it was pay to win style. You could unlock weapons and characters, and that would make you ahead. But EA, I don't believe it's great over Activision Blizzard. Prefer Activision. GE moving up positive here, 0.6% in the after hours. Moving down the list here, see what else is here. AMD moving up 0.31 in the after hours. Microsoft moving down slightly. MU moving up slightly. Apple continuing to sell off here in the after hours, down 172. I don't know if we'll hit 164, 165. I think that's Apple's next sort of flattening out period. We will see if it does hit there. Otherwise, I'm still positive right now. I can always average into more. We only have a month and a half. A month and just 1 month, 1 week until 2019. And then what happens in 2019? We're able to invest $6,000 in our Roth IRA. So if Apple does break below, we just invest and average in, or over the long term, we should be better off that way. So Intel staying pretty much flat here in the after hours. Twitter, Walmart basically flat. I'm sure with the Black Friday, I saw a lot of people buying up Black Friday and Walmart there with their online sales and such. Facebook still going down even further. I know they were kind of going back and forth. They were asking Mark Zuckerberg to kind of step down. He decided not to. That was something I had read this week. So Facebook this week down 5.59%. Year to date down 25.35%. Amazon this week down 5.73%. Year to date down up 28.44%. Interesting article came out about Jeff Bezos. He donated it was a couple million or some amount towards the homeless in Washington State. So I thought that was very interesting. Apple down 10.98% this week. I don't know if that includes Friday. I know Friday got slammed too. That it looks like it must include Friday. So for the week, down 10.98%. That's why my portfolio got slammed this week, because a good portion of our single stock allocations is in Apple, and it is so Netflix down 9.57% this week. Year to date still positive 34.83. Nvidia down 11.82%. Year to date down 25.06. Man, that one just got slammed really hard. Microsoft down 4.82, year to date up 20.49, and Google this week down 3.54%, year to date down in the negative now 2.15. So taking a look here, this is the 1 week performance for the S&P 500 as a whole. Some areas to take a look at are the utilities. You can see some of the utilities over here. Duke Energy, we have Edison International, we have PCG. Looks like it did go down here in the after hours, but overall up 34.39% just within the last week. I think there's a lot of money going into utilities, healthcare, and consumers. So if you look, we've tried looking at consumer goods here in the past, but here, if we're looking just at consumer goods here, we can see Campbell Soup up 3.6%. A couple others there. Smuckers, I think that's Smuckers SMJ. Oop, I zoomed in there. General Motors. So interesting there as a whole, but a lot of red out there. There's a lot of red. Another sector, as oil falls, the airlines are doing well. So here, United Continental Holdings, Delta Airlines, United Airlines, all doing pretty positive with the fall of oil. Oil fell really hard this week, losing, I believe, 14, somewhere around there. I know they got hit hard, like 7 and 6. So I think they're down around 10 or 11%. We'll cover them here in just a minute. So why is Facebook tanking? With the whole scandal with Cambridge Analytica, Mark Zuckerberg blaming his second in command, Sheryl Sandberg. They're kind of going back and forth. People have been asking him to kind of step down. He's not going to be stepping down. I think he doesn't need to be stepping down. This company, they're a huge media giant. They're going to be coming up across these sort of things as they're moving into thresholds that no one's really had to deal with in the past. I think they're setting a good example of what other companies should be sort of doing in order to lock up their security. And you can't really hammer Facebook for not knowing the unknown. So iPhone worries, iPhone sales and production are getting cut, so they're slashing orders on their iPhone XR, XS, XS Max. China's not moving into iPhone sales as much as they would have liked. So stock did fall back there into a bear market. They were already down, as we saw in the beginning, 20.5. They're down again this week, an additional 10%. That puts them down for the year, or down just over the last month and a half, down 30% off their highs. Nvidia, they posted out some, they missed their revenue, and then their forward guidance is lower than expected, so they got knocked down as well. Bitcoin continued to plunge. They're at 4,300, I believe, now. I actually have a link to their website, Crypto. We can go to my brokers and exchange here, and we can take a quick look at where Bitcoin is currently trading here. So Bitcoin is trading, whoa, okay, so maybe that's a little bit harder to see. Let's just go to the other exchange here. So Bitcoin here, $4,285.88. So I've seen some investors out there. I wouldn't say it's an investment. It's more of, I don't know, I would say it's gambling. It's really nothing to really back Bitcoin off of or any other cryptocurrency. I have crypto. I still have it, but I never bought it. I just mined it with my computer, and it was completely free. So FANG, all these stocks here, this is where I got that screenshot from. So FANG stocks are continuing to fall from their 52-week high. This article was put out on Monday. Now stack an additional 3 to 10% off all of these, and you're getting Facebook at nearly 40% down, Amazon at near 30% down, Apple at near 30% down, Netflix at near 45% down, Alphabet at near 25% down. So home builders bounced up slightly there at 0.94% up. Still negative for the year. If you want to pause it, read over oil this week. Saudi Arabia asked OPEC and Russia to kind of cut their supplies. I thought this would actually do really well for them, but oil plunged on Tuesday and on Friday more than 6%. So here, if we take a look at our oil, Tuesday, oil plunged 7.7%, 8.17%, and today losing an additional 6.86%. 5-day change down 11.10%. The dollar is also getting stronger this week. So if we take a look here at the 5-week day change here, we can see the dollar moving up just slightly, getting stronger. So stronger dollar, stronger interest, higher interest rates. That's always, more expensive to have to pay back. So silver and gold moving, it basically stayed flat this week. So it did go down on Tuesday, 0.74%. That basically put them up slightly. I believe they are up for their 5-day, up a little bit, over like a 0.3%. We can see down 1.32% with the 0.74 here. That's down 2%. And if you add 1.12 and 0.15 for this week, that actually puts them negative. So silver went down negative this week. Gold 5-day up 0.13%. So I have seen other investors have buy silver, but not the paper silver. They actually went out there and purchased some ounces. So interesting there. Bonds moving up slightly, 0.03. That's just basically flat. But if you're trying to keep your money out of the markets into some sort of an asset that's still getting you some sort of a return and yield, bonds are where you would move into. So 10-year is at 3.05, down from 3.07% last week. I believe is where we covered it last week. So the treasury yield's still staying there. I like to see that kind of stabilize. If we can get under 3 and we get a weaker dollar, I think that'll kind of push the market back up higher. Prime rate's currently at 5.25. The Fed is expected to raise rates here December 16th, 2018 to 5.5 and 3 additional times in 2019. So we're going to see a 6.25% prime rate. That's an additional 1% over where we're at now. That'll put, that you're going to lose about 10% of your buying power if you're looking out there for real estate. So you can expect probably real estate to continue to kind of flatten it out, not move as high anymore. My own house went up 50% just over the last 5 years. I'm not expecting a 50% increase again. That was, I used the equity. I went out there, used my equity that I have in my home, got a HELOC and such, but I don't see home prices continuing to move higher. They might move at 2 to 5% increase per year. I know my house is still moving up kind of slowly. My other rentals that I just bought, they're moving up slightly in equity, but not as quick. And Goldman Sachs does believe the U.S. economy will slow to a crawl next. Goldman Sachs predicts a 2.5%, 2.2% growth in GDP for the first 2 quarters, but then just kind of a slowdown at 1.8 to 1.6 for the real GDP growth. So we might see them kind of, skirt. I don't expect a recession. Goldman believes the U.S. will skirt a recession next year. I'm not sure if that means start or kind of skip. I don't know why they use the word skirt there. I don't know. Maybe that's slang for something else. I'm not sure. But interesting article. If you guys want to check it out, link in the description below. And that is all I wanted to cover in today's video. So if you guys are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. If you guys would like to have something to discuss either on M1 Finance, Merrill Edge, stock market, some sort of, something out there, let me know in the comment section below. And that is it. Thank you all for tuning in. If you did like the video, hit that thumbs up button below. And I will catch you next week. And also look forward to a video. I'm going to be doing a walkthrough video of my properties after they've been fixed. We are getting them listed right now. They're getting cleaned up and listed, and hopefully I should have someone in them. We can go over the full numbers of what it costs to repair them, all the numbers, what they're getting rented for, what my expenditure, cash on cash return should be, and what my next projects will be going into 2019. So thank you all for tuning in. I will see you next time. Have a great day. Bye.